Hey everyone, welcome back to our YouTube channel Akib TJ. Today we're breaking down one of the most important economic concepts you need to understand: inflation. Inflation is the increase in the overall price level of goods and services over time, which leads to a decline in purchasing power. Simply put, your money doesn't go as far as it used to. Let's break it down further. First, demand pull inflation. This happens when demand for goods and services exceeds supply. More buyers, limited products, prices go up. Second, cost push inflation. When production costs rise like fuel, wages, or raw materials, businesses increase prices to maintain profit. Margins. Third, monetary expansion. When more money is printed or circulated in the economy, the value of money decreases, pushing prices higher. Another key factor is supply chain disruption. Delays, shortages, and logistical issues can reduce availability of goods, leading to price increases. Now let's look at how inflation affects you. The most direct impact is on your cost of living. Everyday essentials like food, fuel, rent, and utilities become more expensive. Next is income pressure. If your salary doesn't increase at the same rate as inflation, your real income effectively decreases. Then comes savings erosion. Money sitting idle loses value over time, reducing your financial security. Inflation also creates economic uncertainty. It becomes harder for individuals and businesses to plan long-term decisions. There's also an impact on interest rates. Central banks often increase interest rates to control inflation, making loans, mortgages, and credit more expensive. Now, how can you respond? Start with budget control. Track your expenses and focus on essential spending. Next, build multiple income streams. Relying on a single income source increases financial risk. Most importantly, focus on investing. Assets like stocks, real estate, or businesses can help your money grow over time and outpace inflation. Also, avoid holding too much idle cash. In an inflationary environment, unused money loses value every day. Here's the key takeaway. Inflation is unavoidable, but being financially aware and proactive can help you protect and even grow your wealth. Another approach is focusing on assets with growth potential. Certain investments tend to perform better during inflationary periods because they increase in value over time. You should also pay attention to spending habits. Being intentional with your purchases can help you stay financially stable even when prices rise. In addition, building an emergency fund becomes even more important. It provides a safety net during times of rising costs and uncertainty. Let's not forget the role of central banks. They use tools like interest rate adjustments to try to control inflation and stabilize the economy. But even with these measures, inflation cannot be completely eliminated, only managed. So what's the bottom line? Inflation is not just an economic term, it's a continuous force that shapes your financial reality. The more you understand it, the better you can adapt and make smarter decisions. If you found this video valuable, don't forget to like, share, and subscribe for more insightful